We have to help a lot of people. There's not a lot of time left, you guys. And the Peter Leeds team, we watch a tremendous amount of financial content. And so what I thought I'd do is I'll pull out some of the stuff that I've seen, which I think will be the most help and benefit to you to understand the economy, to make the right decisions so that you land on your feet, help the people that you care about. So we're going to go through it really quickly. It's a short video. I've got all the best clips that are going to matter to you and make a difference.
The worst case is stagflation. Higher rates because you have a booming economy and there's a lot of competition for capital is not the same thing as stagflation.
You're talking about the most overvalued housing market in the world. I mean, Evergrande is just the tip of the iceberg. The problem is massive.
And this one literally just came in about a minute ago. U.S. jobless claims increased slightly to 207,000 for the week.
Everything but the Magnificent Seven is essentially flat or down on the year.
I'd say in the next 7 years, you should be able to see 13.5%, 14%. Yes. Now, I'm not saying we get there.
And while overall productivity for the Chinese labor forces have gone up by 50 to 100% in the last 10 to 15 years, the debt load has gone up by a factor of 5.
Welcome to the channel. My name is Peter Leeds, and we're all about getting you profits quickly and easily.
Peter Leeds, Premium Investor Enlightenment.
AI is real. We already have thousands of people doing it, and it's a living, breathing thing. So people want to answer, what's it going to do? It's a living, breathing thing. It's going to change. There are going to be all different types of models and different types of tools and technology. But the way to think about it for us is every single process, so errors, trading, hedging, research, every app, every database, you're going to be applying AI.
Mortgage demand drops to the lowest level since 1996 as interest rates head toward 8%. Applications for a mortgage to purchase a home fell 6% for the week and were 22% lower than the same week 1 year ago.
I still think that maybe 7 years from today, we're at least 4.5% or 5% where we are right now. So there's no real drop in rates, and there'll probably be higher rates from there.
Building bridges to nowhere. The Chinese absolutely reached that level probably back in the early 2010s, and most of the construction we've seen across China is of questionable economic use, and the debt has been building up. Corporate debt has basically doubled since 2010. And it started at a level that was already in excess of American debt. So, we're talking about a huge amount of money that has been put into things that probably are never going to have a return.
Things are not going to plan with China's economy. Joe Biden says China's a ticking time bomb. China's in trouble. The Economist magazine talks of President Xi's failing model.
Biden cancels $9 billion in student debt for 125,000 borrowers.
It's idea generation, it's large language models, it's note taking while you're talking to someone, and while it's taking notes, it may actually say to you that, here's the thing of interest the client might be interested in, all error, all customer service. It's a little bit of everything.
But it is going to replace some jobs.
Of course, yeah.
That if you want to know where inflation is taking the markets and why, just look at government spending. The vigilantes have new horses and they're riding, and I really do think that is the answer. We are spending too much. We are not learning to cut back. As a matter of fact, I think we're out of control as we approach a $2 trillion deficit.
Your children will live to 100 and not have cancer because of technology. And literally, they'll probably be working 3.5 days a week. So technology's done unbelievable things for mankind. But, planes crash, pharmaceuticals get misused. There are negatives. This one, the biggest negative in my view, is AI being used by bad people to do bad things.
More than 75,000 workers strike at hundreds of Kaiser Permanente healthcare facilities across the U.S. The coalition of Kaiser Permanente unions has described the work stoppage as the largest strike of healthcare workers in U.S. history. A lot of the areas affected are California, Colorado, Oregon, Virginia, and District of Columbia, and Washington State.
I think what you've seen in the bond market is a capitulation, a good old-fashioned, I'd like to say Old Testament capitulation right now, where basically most of the year bond investors, bond managers have been long, been trying to argue why we're going to have a recession, why there's going to be a rally, and have been getting their brains beat in.
In 2007, official figures showed China's annual growth peaked at over 14%. This year, it's projected to be around 4.5%. And an important part of the equation is property.
The U.S. has been very strong for a while. No surprise, $5 trillion was pumped in fiscally, $3 trillion to $4 trillion of QE, and now that's being reversed.
This is from the Bay Area Times. Twitter's U.S. revenue is down 60% year over year.
They are running out of little tricks to pull out of their bag. And in my opinion, the quantitative easing removed many signals in the market that now it's trying to put back in place. And they could do as they wish. If they keep tinkering with this, the problem is we have too many large economies that are going to be in the same boat. And who's going to end up buying this paper?
Letting Country Garden fail could lead to wider panic, more economic pain, and potentially more defaults, risking contagion and social unrest. On the other, stepping in with a rescue package would put officials on the hook for many more bailouts and prop up an unsustainable industry.
Energy prices are going to go higher. Does that mean, what that means is we'll have more year-over-year in CPI inflation? Does that mean the Fed's going to raise rates because of higher energy prices? No. But let's go back to yesterday when Jay Powell heard it about inflation. If higher gasoline prices, higher energy prices, say, push inflation back to 4%, they can't talk about easing next year in the face of 4%. So what higher energy prices do is they kill the potential for rate cuts next year. Maybe they don't add rate hikes this year or later in the winter.
For the Chinese development model, this has proven successful at keeping the Chinese citizens' money as part of the process that then funds all of that investment. In China, the average citizen, in many ways, is being forced to help underwrite all this bad debt.
They're operating under this assumption that 2% inflation is still attainable and coming, and I think the market is really starting to question that.
A second war could easily erupt in Europe while everyone's distracted by Ukraine. That has been the big concern I've had for a while. Same thing with what happened in World War II, for example, as one example of many. Sometimes when there's one war or something significant going on over in one area, that makes it more likely for other bad actors to engage in the wars they want to engage in and not worry so much about the repercussions. America's not going to be so tough on China when it's dealing with Ukraine like it is.
The property market accounts for around 25% of China's economy. For context, in the US, it's 16% of the economy.
The consumer's still in good shape. They're still spending money. They still have more money than pre-COVID. It's spending down. Home prices have gone for 15 years. Asset prices have gone for 15 years. They're in pretty good shape.
And the Bank of Japan could actually pull the plug that drains the water on everybody's bathtub. And that's the real fear I have, is they have no idea how they could be the catalyst. They could be that one ping pong ball you throw in a room with a bunch of mousetraps with other ping pong balls, and then all of a sudden things start flying.
And that same year, Business Insider reported that China has at least 65 million empty homes, enough to house the population of France.
Peak crude demand is fueling anger and argument in the world of oil. Peak oil demand refers to a point in time when the highest level of global crude demand is reached, which will be immediately followed by a permanent decline. This would theoretically decrease the need for investments in crude oil projects and make them less economical as other energy sources take over. For oil-producing countries and companies, it's existential. Just remember, some people will see this headline and they think that that means so many things for oil, but don't think of it that way because the time frame is so long. Yes, maybe we're going somewhere 10, 20 years down the road, but in the meantime, this is just a blip in a moment in time, which is more theoretical than actionable right now, in my opinion.
This problem with real estate supply and demand isn't limited to this area. It isn't even limited to this city. You can drive out of here for hours and you'll find clusters of towers with unoccupied or unfinished apartments, many where work has stopped altogether.
Well, it's waking up to it. I mean, the drawdown in the stock market now is the largest we've seen since we hit the bottom in October of last year.
And so they're always looking for outlets. Now, they can't send their money abroad, so they're looking for outlets at home. And so China is famous for massive speculative bubbles that happen in commodities or gold or anything. And the one that has proven the most problematic and the one that has generated the most economic growth to this point has been housing.
Bloomberg suggests China's housing slump is much worse than official data shows, and falling house prices have a number of knock-on effects.
It doesn't make anybody feel very wealthy and willing to spend if you're seeing the value of your home decline and house prices falling around you.
University of Chicago's done a long-term study, says long-term the stock market will give you 9%. Have up years, down years, 9%.
This bearish fund manager thinks the U.S. is headed for a debt crisis. Wow, I can't believe anybody needs to hear that. It's so blatantly obvious the situation we're in. A more significant story would be if somebody didn't believe that we were headed for a major debt crisis.
In 1980, 20% of the population lived in urban areas. By 2021, it was 60%. That's involved millions of homes being built.
I think that when many look at the markets and they scratch their heads, they just don't understand that the Fed held the beach ball underwater for so long, basically a decade of zero that shouldn't have been at zero, that ultimately the force that this thing's popping out, I think, is justified.
The fiscal money being spent is so big, largest in peacetime ever, America and kind of around the world, with already very high deficits. And QT we've never had.
The government does allow you to own your own home. So people did that with gusto. And then they started buying apartments, and second apartments, and third apartments, and fourth apartments. And basically we got an Enron-style financial boom driven by growth in construction of the housing sector.
Disney's discounting child tickets at U.S. parks as industry attendance lags. The company's U.S.-based parks have seen a slowdown in attendance and hotel room occupancy, and consumers have faced higher costs due to inflation. Just the other day, we got that testimonial from Yvette where she said she paid for an entire family vacation to Disney with the guidance we gave her through the Peter Leeds newsletter. And my reply to her was that I know that it's not cheap to go there. I've been there a few times. I've got kids. You get a bottle of water for $8. If I'd been sitting on a chair, I would have fallen out of it. But that's how they make their money at Disney. They just sell you the water for $8.
Right now, these problems centre around two enormous property developers, Evergrande and Country Garden. Because in order to build more and more homes, they borrowed more and more money, which is why their debt is estimated to be $300 billion and $196 billion, respectively.
And then all the long-term fiscal things are kind of inflationary. You know, oil prices, certain commodity prices, the green economy, you know, the restructuring of trade.
There's sufficient spare housing to house twice the Chinese population.
As the Wall Street Journal reports, Chinese local government's total land-related income in 2022 was down 23% from a year earlier.
I don't think inflationary will be that, you know, keep on coming down. It may not. And therefore, rates may go higher.
That's why I do think we're going to get a pause. Yeah. And I think we're going to consolidate here. But I urge people not to try to pick tops and yield. Let the market tell you you can dance between the raindrops a bit.
They have had some real difficulty in terms of their economy of late, particularly in real estate. And I think the actions that they're going to have to take are ones that they're in the process of deciding right now.
But the biggest storm cloud is geopolitical. It's Ukraine, the humanitarian crisis. You know, it's a war not far from here. It's along 600 miles, 500,000 people been killed. It's nuclear blackmail. It's going to affect all global relationships in America and China, trade alliances. We don't know how it's going to start either.
More mortgage applications are being rejected for insufficient income. In 2021, 14.2% of refinance applications were rejected. In 2022, that number has risen to 25%.
Huge problems at Country Garden. That's China's biggest private property developer. They've announced a $6.7 billion loss in the first half of the year. And now they're kind of lurching from deadline to deadline as they try to pay their debt.
The American subprime crisis at its peak had less than 5% overbuild because of subprime, probably closer to 3%. And it was only because we bound up those mortgages with more healthy real estate investments in asset-backed securities that it actually turned into a big crisis. And we all know how that felt here. Ultimately, we had a financial crisis that lopped 5% off of GDP. If in China you're talking 100% overbuild in a country that is suffering from the advanced stages of terminal demographic decline and is already experiencing massive population losses.
I just tell people, be prepared for higher rates and slower growth.
7%. Are we really going there? And,
well,
and how
I don't know. When I said 5%, they said, are we going there? Yeah, it's possible.
These stocks are close to forming the dreaded death cross, including McDonald's and Wells Fargo. Don't worry too much about that. It just sounds more dramatic and alarming than it needs to, but a death cross is when that price chart pattern forms, when the 50-day moving average crosses below its 200-day moving average. And it's usually considered a sign that investors are bearish on the stock or that the momentum is weakening and that shares will continue to decline.
As the Wall Street Journal noted last year, Evergrande's distress has spread across China's housing market and many related industries. And let's remember, these aren't simply property firms. They have many other interests too. For example, Evergrande owns an electric car firm. It owns one of China's biggest football clubs, Guangzhou FC, and much more besides.
This time around in China, this specific aspect of the overbuild, which is the biggest in human history, isn't even reflected in the debt data because a lot of Chinese have been able to pay for these apartments with cash. And they now have invested, for the most part, their total life savings in an asset that is probably worth at most a quarter of what they paid for it.
We may have a soft landing, we may have a mild recession, we may have a harder recession. You know, obviously, there are potential bad outcomes. The worst one would be economically is stagflation, right? Where you have low growth, high interest rates, and obviously, if that happens, you're going to see a lot of people struggling.
Private payrolls rose 89,000 in September, far below expectations. Job gains came almost exclusively from services. There's things like servers, temporary workers.
All sorts of comments predicting the collapse of China's economy keep resurfacing. But China's economy has outlived them all. What has collapsed is such rhetoric, not China's economy.
But in China, you're talking about a complete wipeout for what, for most Chinese citizens, is their primary and maybe even only method of savings.
Where's China on the list of risks?
When I say geopolitical, that's the big one. It's the thread from Ukraine, oil and gas, food, migration, all our relationships, the most important one being China.
China was catching up to the industrialized world for the last several decades. They've caught up in a lot of ways. So that growth engine is now dissipated, as it must for every economy that matures.
This is going to hit them from every possible angle when it breaks, and it's going to do so by ripping the heart out of public support for the entire system and the CCP and the government in particular.
But look inside some of those gleaming high-rises and you'll get a surprise. There's no one there. Families are buying up second, third, even fourth homes purely as an investment because property is one of the few places Chinese can put their money and get an amazing return.
I'm so proud of you guys. You're brilliant and you're getting the right kinds of investor enlightenment. The fact that you're here means that you're understanding what I'm saying. You're seeing that I've been calling this the whole way. I've been wrong plenty of times, but I've seen this entire economic breakdown playing out from years ago. And I warned about it years ago, and it's all played out now. We have to help a lot of people. There's not a lot of time left, you guys. And make sure to click the bell. A lot of people got unsubscribed that were subscribed, so just double check that you're still active with us. This is going to help us a lot, get the message out.
Please subscribe to the Peter Leeds channel. We're all about getting you profits quickly and easily.
Show your support by subscribing to our underrated YouTube channel.